Welcome to Money on Tap, your personal finance headquarters. Money on Tap is where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues and bring a fully independent planning perspective to the table. My name is Seth Krussman, and I'm joined here once again with John Ryder and Ben Brayshaw. Good morning, guys.
Good morning, Seth.
Good morning.
We are also glad to have Eric Morton with us, who heads up our property and casualty division here at Brayshaw Financial. Good morning.
Good morning, gentlemen.
You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. Also, you can find us at Facebook /3D Investing or Twitter BFG_LLC. That stands for Brayshaw Financial Group. And we have arrived again to this most wonderful time of the year. It's time for all of you that have been putting off
Christmas, Seth? Christmas? No.
This blessed opportunity to file your taxes. It may be a job that you have other people do. You may do it yourself, but whatever and however you take care of that, you got to do it. And so today, the title of our show is There Are Two Certainties in Life, Death and Taxes.
Hey, Seth, you know what the reality is, though? The reality is that you really don't have to file your taxes. You know, if you ever take a look at the at a TV
oh yeah, they'll
news
do
show,
it for you.
No, I haven't filed my taxes for 11 years. Now we have some serious issues.
Right.
Think about it. You know?
That's where the death and taxes, it's like, I think it should be death or taxes. Which do you prefer?
Yeah, I think
Right.
that's exactly right. Because you know what? You can go away. You can think everything's going to go away and no one's going to bother you. But the IRS will catch up with you, unfortunately.
Oh, they'll send you a bill eventually,
And they
right?
might send you more than that, Seth. They might send you armed officers to your door.
Yeah, they will cause your death if you don't pay your taxes.
Now, we'd love to take credit for the name of this show, but and we do like to take credit for pretty much everything that is on this show.
Yes.
That's just our nature. But frankly, it was Benjamin Franklin who wrote that or coined that phrase of death and taxes in 1789. And along with that, he said, our new Constitution is now established and has an appearance that promises permanency. But in this whole world, nothing can be said to be certain except death and taxes. And I love that the two sides of the coin, there's the positive, and then guess what, folks?
Slam it home with some truth, Ben.
So we'd love to go ahead
That
and
was
caveat
Benjamin
that
Franklin,
with a
too,
little...
not Benjamin Brayshaw, just so everyone knows. Let's make that very clear. Not Benjamin Brayshaw that said that back in 1789. That was.
But if I was there, I would have said it.
He would have.
I would have
So I would give him credit
he
for
would
that.
have said it
so,
frankly.
yeah. And maybe even said it in more easier terms to understand. I don't know. Maybe just he would have said something.
Yeah, I
don't
feel
know.
like he would have put a different spin on it to make us understand it a little better.
But
you
he
know?
probably also would have, had he been a financial planner, have to give a caveat about taxes and about our abilities to advise on taxes. Go ahead, Seth.
That might sound something like this. At the top of the show here, we are not tax advisors and we are not licensed to give you advice in regards to your specific tax situation. It is always wise to consult with a licensed tax professional who can provide you with the proper advice needed when it comes to your tax situation. Blah, 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 blah.
Yes, interestingly enough, Seth, we as financial planners have to work with both of these certainties, death and taxes. But today, we are going to spend some time talking about only one of those realities. And since we've had some recent shows on death, and it is the beginning of April, let's spend some time talking about one of those grim realities we have to talk about, taxes. So we're going to spend some time taking a look at some things you should be aware of when it comes to taxes and how they affect you. But first, it's time for Money in the News. So somehow, even though we were not talking about death on this show, our first article is about death, believe it or not. So
John, you can't help yourself.
I can't help myself.
How do we have two articles about death and taxes on a death and taxes show.
That's
and
just
Money
what
in the
we
News.
do. That's what we do here on this show.
Who planned it? Who does the writing?
What is going on here?
All right, so first article. Wall Street Journal, March 29th. Death care stocks have made a killing for investors. Now it's time to say goodbye. So what's kind of interesting is this. Over the past decade, there's basically a couple leading U.S. providers of funeral and cemetery services. They've reaped a total of nearly 1,300% in stock returns for their shareholders. It's about 1,000 percentage points more than the stock market as a whole. So we got a couple of these companies out there. We have Service Corp International and Carriage Services. What they're doing is they're buying up these different mom and pop funeral homes, and it seems to me that there would be a lot of profit for them going forward. But this article here states very timely, it says, dig beneath the surface, though. And Eric would add, how far beneath the surface, Eric?
I'd say 6 feet under.
6 feet under. Okay. And it seems to me, and it seems to the guy that wrote the article here, that there is really an issue with a lot of profits going forward here. And they're thinking that even though there are millions that are going to their grave, that the profits may not be there. One of the things that's kind of disturbing or stirring up the pot when it comes to these death stocks basically is the fact that people now have the ability to go online and to be able to actually get a better deal than the funeral homes are offering. So, for instance,
Yeah, I think I saw that Amazon is coming into the picture here, right?
Well, where is
Big
Amazon?
surprise.
Where is Amazon
Big
not
surprise.
coming into the picture here? But the fact is, people, when they go for a funeral, it's a very traumatic time for them, obviously. There's not a whole lot of research being done as far as how much things cost. Funeral directors, and it says here in the article, they don't really spend a lot of time talking about the prices. It's basically talking about all the different things they needed to honor the deceased one. But then in the end, there's a check that they end up writing for $10,000 to $12,000 when you add everything all up. So Amazon's getting into the game here and saying, hey, listen, we can give you an urn for $75 as opposed to $350. Or we can figure out how to send you to best price caskets where you can get a savings of between $3,000 and $5,000. And so basically what the guy from the Wall Street Journal is saying is this. He's saying, listen, the profit margin on these types of services are going way down. So don't expect to see these death stocks, which have done so well in the past, to escape.
I really see a movement here with the DIY crowd and the home gardeners that are...
Why did you link the two there, Seth?
That sounds like a grave mistake, Seth.
You know what?
Part.
I think it's interesting to me that this is turning into also the Best Buy effect, where folks will go down to their local funeral home, take a gander at the wares, and then rush home to make that purchase online. That slightly boggles my mind. I just don't see
Eric,
a lot of folks.
Eric, is that because you are part of a family funeral home and you don't want that to happen?
Well,
Do you have a family funeral home that you haven't disclosed
ties in
to
the
us
community?
on the show?
Yeah, there's one just a block up from my office. Bothers me.
Yes. Hey, full disclosure: Seth and Eric both have a funeral home they invest in the Oregon area. So
I actually advertise in one. Full disclosure, full disclosure.
Well, you know
Wow.
the thing about this area, like there is so much demand with the baby boomers and what's going on, and we've got 90 million Americans or so going over age 65 in the next 20 years. That's 120 million Americans. That's 38% of our country is retiring or retired, and death is certain, and the demand for caskets and urns is going to rise, and there's going to be value. And I think we could probably run off and say, hey, everyone's going to go buy the Amazon casket. But the truth is we're
small
going
percentage.
we're going to do this show, and I'm not going to buy a casket after listening to the show.
Put it?
Yeah.
Where are you going to put it?
So I need
You're
to
gonna receive that?
hey, listen, what does my family do to let everyone know that the casket I purchased needs to now be delivered, right? So,
Well, I guess how I would summarize is this, Ben, if I was going to summarize it, guys, I'd just say on paper, death care looks like a safe, growing business, but that could be a grave miscalculation.
Oh, there he is.
Johnny brings it home.
All right, so moving on from death, it's time to talk about tax refunds. We were talking about this last year, guys. We were talking about, with the Trump tax cut, kind of how things would look. And it does appear that there have been higher refunds coming to folks as a result of the tax cut. So we're looking.
You know how I know, John, is I go to Facebook and I see where all of my friends and family are vacationing this year. There's been a lot of people that are no longer going just an hour west of us to the beach this year, but they're now in destinations like San Diego or Sacramento.
Yeah. No, there has been a lot more vacations.
Fresno, for instance,
Fresno.
is a hot
Well,
spot.
I mean, the tax law changes have really simplified a lot of things for a lot of people. I think the statistic, and don't quote me on this, but the statistic was like 20% of people were itemizing their taxes. And with the tax law changes, they've reduced it down to
changed.
like 7% or something of people are itemizing. So if you're itemizing, but they've also let go a lot of people from the IRS because they know they don't need as many people to do audits and so forth. So that's an interesting twist. But if you're a renter, like if you're generally just renting a home or renting property and so forth, like the tax cuts were phenomenally strong for you because you couldn't deduct the rent. And it used to be that you would get an automatic $12,000 married filing jointly deduction.
Double now.
And now automatically before you deduct anything, you just get $24,000. So they've doubled that for married filing jointly. So, if you were only deducting, if you could only come up with $6,000 and you just got the automatic of 12, now you get an automatic of 24.
Hey, you know what's funny, Ben? We're going to talk about that later on in the show because that is a major tax incentive for people.
Yeah.
We'll talk about that. It makes it a lot easier too, and we'll talk about that. What I wanted to highlight here was about the refund scare. Might have been much ado about nothing. That's the title of the article from Dan Kaplinger. And it's basically talking about the tax reform act that took effect in early 2018. And there's a lot of people out there that were scared that tax refunds might come in a lot lower than expected. That had many people panicking, citing concerns about withholding practices and leaving many to feel like lawmakers had misled them about the impact of tax reform. But as tax season has progressed throughout this year, the numbers on the refund front have looked better. Tax refunds have not only jumped back to more attractive levels, but have also eclipsed the typical amount from last year. And that has many more hopefuls about their prospects to get money back from the IRS. So typical tax refunds now are up above $3,000. Would love to say I had a $3,000 refund coming, but I don't think that's happening. But anyway.
How much? John, I'd like to ask directly. How much do you have
I think it's going to be zero this year. Zero.
Well, that's perfect. You planned perfectly.
Yes. Okay, so anyway, though, the fact
Such a
is
good
that
planner.
as recently as February 8th, the refund was around $2,000. So we've been seeing a steady progression of refunds going in the right direction.
But this is refunds on top of people who are actually, pretty much most of America is getting a little bit more money in their paycheck.
Right.
These are refunds on top of that. So, when you start thinking about the fact that you've gotten a refund and you're taking home more, making maybe even the same money, it's a pretty impressive tax benefit that's happening to all of the middle class and the lower end on the pay scale.
So one of the effects that we plan on seeing this next year is the national debt go down by at least $1 trillion, right? Is that the correlation that we plan on seeing there?
I heard nothing about the national debt going down. All I hear about is it going up. But were you making that up, Seth?
I make up everything. I'm just full of
Disclosure. Can you read that
Yes.
disclosure one more time?
Yeah.
Just a refresher for everyone listening.
My name is Seth Cressman, and I make everything up. Okay, good.
All right. Is that it? You got anything else there?
Well, the thing is, you were saying how people are starting to use their refunds for different things. So you're seeing people use it for vacations and all that?
Again, that was me spending time on Facebook while we were recording this radio show and realizing, hey, everybody's in Malibu, everybody's in Hawaii, and
yeah, no,
that's
I agree. I have seen a lot more travel going on in and around the area. I don't know about you, John, but I think about the winter break we just had, and I mean, it seemed like everyone was going somewhere.
I know some folks that are in the trades business,
Yeah.
and what they say is that typically, like right now, believe it or not, it's kind of a very, very slow time for them. Not a lot of issues with plumbing, not a lot of issues with HVAC and all that right now. But they say typically right around April 15th, right after tax time, people start getting their refunds back. So in May, June, and all, they start seeing a big, big increase in the amount of work because people say, you know what, I've been meaning to put this system in, and then they get their tax refund back for $2,500, and they say, hey, I'm going to spend. So this, the owner of the company that I was talking to here in town was basically saying that, hey, we tend to get a lot busier because people are starting to do some of the projects they need to get done, and they have a tax refund, and that's kind of what's fueling
what they're
the work.
doing, John, is they're getting back from their family vacation to Hinsdale, New Hampshire. Everybody knows you go there straight from where you guys are from.
Absolutely.
And then when you get back, save some money, go to Hinsdale, and then you can take care of the HVAC. That was always my family plan when I lived there.
Two-prong approach there, folks. That's going to take us out of our Money in the News segment here at Money on Tap. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. Hey, we're going to be right back. We're talking about two certainties in life, death and taxes. Don't go anywhere.
Hello, my name is John Ryder, a partner with Brayshaw Financial Group and one of the co-hosts of Money on Tap. 10,000 Americans are turning 65 every day, and planning a successful retirement today is more challenging than ever, with a roller coaster stock market, political and economic uncertainty, and so many unknowns when it comes to the escalating costs of healthcare. Let us show you how we utilize the 3D method of investing, utilizing insurance, brokerage, and fee-based planning. Using our experience, let us help you plan for a successful retirement. Now is the right time to start getting help. Give us a call at Brayshaw Financial Group at 855-226-8551. Headquartered in Bedford, New Hampshire, we have offices across the country. We would love the opportunity to meet with you. There's absolutely no cost or obligation to meet with us, and we welcome you to our offices. Call 855-226-8551 today.
More Money on Tap in just a moment. Patriots tight end Rob Gronkowski announced his retirement from pro football in March 2019. Prior to his retirement, our Money on Tap guys gave him kudos for his excellent strategy for handling his finances. We'll pay homage to Gronk on today's Cliff Notes edition of Money on Tap.
I am very excited to mention Rob Gronkowski, who is our kind of hero of the day in the financial world. I think we're going to just...
and on the field, too.
On the field,
Yes.
Absolutely. To be able to earmark somebody as well known as Rob Gronkowski, who has showed good talent on the field, strong standards financially that we're going to go through, and has been a community guy on top of that. I mean, there's a kind of a win-win-win here.
Okay, so this guy earned $10.5 million last season, including a $2.5 million bonus for being named All-Pro. Fifth time in his career that Gronk has achieved that honor. But he hasn't spent a penny of his contract money from last season. In fact, he says he hasn't touched any of his career NFL earnings, including the 6-year, $54 million contract he signed in 2012. What is this poor guy doing? Is he like on the streets because he hasn't spent any of his money? Well, the fact is he has lots of endorsements.
Everyone budgets the way they budget. I found that people either budget poorly or they budget well, right? So, but everyone has a budget. It's just
Right.
they either spend it all or don't.
Some people say they don't have a budget, but yeah, they do.
They do. Gronk has decided, hey, I'm going to save all my money from my earnings with the Patriots, and I'm going to spend my contract money for all the in-person performances or all the different things that he's doing. He's spending those dollars. Even that, he's saving some of it.
Yeah, he says, I live off of my marketing money and haven't blown it on any big money, expensive cars, expensive jewelry, or tattoos, and still wear my favorite pair of jeans from high school, which is, I think, kind of funny. Come on.
Well, I gotta find out like what the brand name is because I'm gonna start outfitting my kids in those. They just apparently never wear out.
I know. Hey, so he was just on this show. It was called, as a video series called Kneading Dough, and he said that he still lives by the same code, spending only the money he earns from endorsement deals with Dunkin' Donuts, Nike, Bart Yammer, which I'm sure is a lot of money. Okay, so let's not say he's only getting paid $20,000 a year for endorsements. We all know that's a lot more than that. But he says instead of blowing his money, he's been investing. He's happy with the results.
Thanks for joining us for this Cliff Notes edition of Money on Tap, with great tips from the pros in three-dimensional investing. utilizing insurance, brokerage, and fee-based planning. And now here's more Money on Tap with Ben, John, Seth, and Eric.
Welcome back. You're listening to Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. Hey, we also appreciate our podcasters out there for the downloads and you don't like podcasts, you download, you subscribe. So thank you. We appreciate that. We're talking about death and taxes. It's our favorite topic here at Money on Tap because we do it every year and we're happy to do it. But guess what? It's different every year as well because, well, we're definitely in a different tax code, folks, and it's been some big changes around our offices here, big changes for, I don't know. You name it. We're throwing out the old book and we're in with the new, and we can't wait to give you some really helpful resources here as you celebrate this most wonderful time of the year with us. But if you are listening to this show before you've filed, which we hope is when we get to you, we're going to spend some time talking about things that you should be looking for in 2019. And if you're listening after that deadline of April 15th and you're, well, filing an extension, which we do know all about here as well, then this show is also for you because, you can apply a lot of this information. If it's not for this year, it's for the following tax year. And it's always nice to be prepared when planning.
I think we spend a lot of time, and probably the first round of this piece will be, dedicated to the self-employed listener, which we have a lot of. And Seth, you mentioned filing an extension, and I think, a lot of self-employed people have to file extensions. I mean, I just think about a lot of the people we work with who are still, some K-1s like literally just came out.
Is that the most annoying thing? Okay, so it just seems like, these last several years, we've been having a lot of those forms that actually come out. And a lot of times people are saying, hey, where's my form? Where's my form? A lot of these companies take a while before they actually get to it. And so they're not really providing those forms on time. So sometimes people, unfortunately, get forced into a little bit of a situation where they need to file an extension because they don't have the actual tax form they need yet.
Yeah, and I mean, and sometimes they're looking at us like, hey, where are those forms? Do you know how I can get that? And it's like, we can't control some of them. I mean, one thing I think the government has done intentionally is not allowed financial planners or advisors or anything to actually handle any of the tax documentation because, that's probably where a lot of, inappropriate actions would occur. Oh, I don't want this guy to see these taxes this year. That would be horrible. Those are types of things that we'd have zero
Somebody would
influence.
do that?
I know. Can you believe it?
Oh.
Okay, so anyway, we're going to be talking about self-employed folks in the first part of our show. The second part of our show, we're going to be talking about a little bit about the differences between tax deductions and tax credits. And that might be interesting for some of you as you're starting to think about, hey, I need to get this tax return stuff going now. But really, our first thing that we want to talk about is let's talk about some tips for the self-employed. So if you're self-employed out there and you have that wonderful responsibility of paying in your taxes just like everyone else out there, then these are some things that you might want to pay attention to. So the number one thing that we often recommend, or that tax professionals would recommend that people do, is to make sure that you keep up with quarterly estimated tax payments. Ben, we had a gentleman in our office the other day, and he made a very interesting comment. This guy is a self-employed guy. He is actually in a business which does a lot of excavation and that type of thing. And he made an interesting comment. We were talking about getting behind when it comes to retirement. And he says, yeah, you don't want to get behind in retirement. It's kind of like getting behind with the IRS, because once you get behind with the IRS, it is really, really hard to catch up. Kind of almost like credit card debt. If you think about these people out there that have $100,000 of credit card debt, it's hard to ever get ahead unless you fall into some money or you figure out some way to take those liabilities that you have and spread them over a period of time, because you can get behind. So what tax professionals recommend is that you keep up with paying quarterly estimated tax payments. So what does that look like? what does that look like? Well, if you're not doing it, then you probably don't really have a clue of how that works. But basically, every 4 months, every 3 months, I should say, you have to go ahead and make a quarterly tax payment. And you're doing that based upon the income that you had in the past year. So why is it, Ben? Why is it, Seth, that many people don't go ahead and make those quarterly tax payments? Why would that be?
Well, I would say that there's a lot of people who are, one is, in the self-employed side, people are recovering from having just paid their taxes, or they're prepping to pay their April 15th taxes and not paying, their quarterlies. And there's like that huge hit because they're like, oh, maybe I made too much, or, I didn't get the deductions I thought I was going to have. And they try to estimate it properly. That's one scenario. The other thing is that a lot of self-employed people have huge swings in income. And that's something that we're constantly dealing with and trying to help people manage through. I think ultimately, when you have employees and you have all sorts of things going, you're trying to make payroll, you got all these pieces, and then, boom, tax codes change, and, you got tax burdens, and you're like, oh, do I take less income or do I pay my quarterlies?
Yeah, I would say the cyclical type of businesses really struggle through that as well. You can just see the numbers on their books, rise and fall throughout the seasons. And sometimes those quarterlies, when you're are due and you're making payroll or you're covering rent or a mortgage or something else that really you have to have in place, the taxes get pushed aside. And, that's probably what you want to do at that time because you want to keep everything else in place. But that you're kind of, it's a little speculative, but that seasonal revenue is going to be coming through and cover what the tax bill is going to look like.
And guys, here's the deal. When you don't pay your quarterlies, the IRS is not knocking on your door. All they're doing is they're saying at the end of the year, hey, we're going to pay you a penalty for not paying quarterly. We're going to charge you a penalty for not
I like the first version.
I know. Wouldn't that be a better version? That
Yeah.
would be a better version. But no. So just like you think about this, if you're not paying your rent, guess who's gonna be knocking on your door? Your landlord. If you're not paying your car payment, you better look out for the car repo guy. But if you're not paying your taxes, whole different deal. Although at some point there will be.
I mean, they can garnish anything.
Yeah.
Everything.
Yeah.
I mean, they can literally, they're the only organization in the world that can literally come in and say, we're going to take your bank accounts, we're going to take your house, your car, we're going to take everything.
It just takes a while to get to that point. There's a book back in 1986, I think it was written, that was entitled To Harass Our People. And it was basically talking about the IRS and really the abilities that they have to go in and to take and garnish paychecks, garnish bank accounts, just like you were saying, Ben.
And I'll jump in here, guys. I think part of it is the mentality of either a business owner that is brand new or is remembering those first 5 years in business and the cash flow on hand. They don't want to dole out that money quarterly. So it's, getting through the thought process of like, okay, now we're past this mark. We're starting to make some money. I need to have a real tax planner involved in my life. And also, that's when you need to start talking to a financial planner as well and get that dialed in.
Claiming the business deductions is number 2 on our list here. And there's been a shift, or there's been some changes that are notable. And we've had lots of conversations, and it's just a part of what comes across our desk daily. And it's interesting to see how some of these have impacted, but there's still a load of these deductions that the business is entitled to. The half of the FICA federal payroll taxes that you pay, cost of legal assistance, that's usually part of our payroll, so to speak, and tax professionals. A home office, if you've dedicated office space to your house, your vehicle, if you used that for your business purposes, interest on business debt is another thing. But starting in tax year 2018, some businesses can claim a 20% deduction for pass-through income, which includes income from the sole proprietorships, partnerships, LLCs, S-corps, and real estate, which is definitely a big difference there.
Yeah, that has really pushed real estate interest in our world in the United States pretty high because of the some of the
pass-through income you're talking about,
and
Ben?
the pass-through income, and then the real estate investment trust stocks and so forth have really become attractive because there's some opportunity there with that 20% deduction, and there's a number of different things that have really changed in how people are moving. And the interest in commercial real estate has significantly risen because the demand for those pass-through deductions are huge. Now, some of those pass-through deductions, though, depending on what kind of industry you're in, like financial planners is one of those that has like all these income limitations where you just completely wash out at some point in time. And so there are some rigidity to some of the service oriented organizations and businesses and so forth that get limited in some of that.
They can't necessarily claim it, perhaps.
Yeah, that don't get it in their own. Yeah, so there's definitely a lot of changes going on. We've worked with a lot of people in this area because ultimately managing your income level, there's this phase out limitation, and we're getting a little too much into the weeds, but somewhere between 315,000 and 415,000, I believe, is the numbers. And you start phasing out of some of these things when you're in these certain service oriented industries. But we've helped people manage who are close to those income numbers. We've helped people manage how they take in income and even creating deductions that might actually benefit them. But for the average listener, if you're a business owner, had a great year, and you're struggling with this scenario and so forth, maybe the end of the year, if you're really close to some of these phase out limits and you happen to be in that area, maybe you buy a bunch of office equipment earlier as a deduction prior to the year end of this coming year to manage your, the amount of income you're taking in and get some more deductions. I mean, those are things that you can do personally, and there's other things you can do in the investment world that we help people with too.
Number 3 on our list is understand how your business structure affects your liability, your tax liability. So typically when you're self-employed, you choose what type of business entity you want. Many people will just start out and say, hey, I want a sole proprietorship. And that would be very, very a very good choice for most folks starting off. But there's another option that some people consider as well, and that option they consider is an S-Corp. And that S-Corp is really designed to help from a liability standpoint. Incorporating your business can actually help you so that you have more flexibility when it comes to your taxes. So if you have an S-Corp, you can actually pay yourself a reasonable salary, and you can actually take some profits out of your company in the form of distributions, and we don't actually have to pay FICA tax on that. So that can be a very attractive thing. But really what's important, if you're out there and you have a business, it's really important for you to take a look at the different types of entities that you can have, whether you go with an LLC, whether you go with an S-Corp, whether you go with a regular sole proprietorship. You should be educated on those options so that you make the best choices for you when it comes to your taxes.
And then you're going to find a lot of that information when, there's a lot of CPAs we work with. We have a pretty good general idea of what people need to do, and then we'll kind of pass them off to a CPA and say, hey, listen, talk to your CPA about this. Maybe this structure might be good for you. We've actually seen people convert from, S Corp to C Corp or C Corp to S Corp. And if you don't know what I'm talking about, that's probably the time when you need to call your CPA and say, hey, listen, I don't know if I'm in the right scenario. The biggest problem we have is that people contact their CPA in April. And after April 15th, CPA is sitting there waiting for phone calls until the next, January, and then they're swamped again. If you're listening today, schedule a meeting in May, because your CPA is going to take 2 weeks off after April 15th, and they're going to go on vacation.
Give them a month.
Yeah,
maybe
a month, I was going to say.
Yeah, they work ridiculous hours during this time period. And, schedule some time with them to sit down and say, I've got to start taking my business and personal taxes seriously, and I need to know what is the best thing I can do. And especially with these tax law changes, if you're not even sure what all these really mean to you and you're getting a ton of money back from the IRS, that shouldn't be a savings account for you. If you're using that as a savings account, that's not the right way to be managing your money. It's okay that you're doing it. There's nothing wrong with getting money back. But the truth is what has that money been doing for you while it's sitting in the IRS's hands?
Nothing.
Yeah. And that's something you want to control and manage.
Seth, can you bring us into number 4, which I think is really the area that we help the most when we're dealing with people when it comes to their taxes?
Taking advantage of tax breaks for your retirement. Self-employed people really have a lot of different options when it comes to setting themselves up for retirement and taking the tax break road on that path. The 401k may not be something that's just offered because it's yourself, right? You're not coming alongside yourself saying, hey, I'm offering my 401k this year. But there is a solo 401k for a self-employed individual, or a SEP IRA. Two of the most popular options that we see outside of our traditional IRA classification, and those open up a whole nother bandwidth of tax offsets that you can use to augment your income for that year. And those are the two. Anyways, coming back to an opportunity, if you haven't taken a look at that, if you have that money that you need to be setting aside towards retirement, those are just two of the options. And without getting too much into the weeds with those, just a couple earmarks there for you.
Those are really great opportunities when managed well. Especially the solo 401k. If it's just you and your partners, and you don't have any employees, it's just, or if your employees are your spouse or something like that, but you don't have any non-related, immediate family member employees, or it's just you and partners. Solo 401ks are a phenomenal tool to manage income for all sorts of different reasons, to keep yourself in a certain tax bracket, to put money away for retirement, to make sure that your passive income generators can, if you're in a service business, as I mentioned earlier, can be controlled. These are like what we kind of like volume dials on income, and you can dial down the amount of income you realize by using these things to enhance other tax benefits. Some of these things can help, depending on how you dial in your income, maybe you're paying alternative minimum tax. And if you know what I'm talking about, there's lots of different ways to dial yourself out of paying AMT. And those are things that if you're not working on, you're not maximizing your financial situation for the best of yourself. That's a big deal. We talk in jest the no judgment zone. We are a no judgment zone. We don't care what situation you're coming from, what scenario you're in, self-employed, perceived success in the community, but you're really struggling financially. You're not alone. This is normal. And all of these questions, just because you run a great business and you're really successful at that doesn't mean you have all the pieces nailed down. I know there's areas like, I'm not going to go build a house, and I'm not going to pretend I can. And those are things that, people need to be aware of. That, listen, come in, sit down. If you're questioning where your tax scenario is, or you think you might be paying too much taxes, sit down with us. We're not tax advisors, but we know a heck of a lot. And honestly, we'll get you to a CPA that will help you really enhance this as well.
Now, there's a lot of people out there that might say this. They might say, well, Ben, John, Seth, Eric, I have a traditional IRA that I'm contributing to right now. And hey, listen, I'm putting $6,500 a year into that. Yeah, I would like to be able to put aside more, but hey, I have some limits. Well, that's exactly why Seth was bringing up that there's different options that actually give you the capability to put away more. So, Ben, you had mentioned about the solo 401k. You can actually put a lot of money into that program. And that's really an advantage to you, especially if you're kind of playing catch-up and you haven't been able to put money in over the years. It makes a lot of sense to go ahead and open one of those solo 401ks if your situation grants it.
Yeah, you're looking at between $19,000 and like $56,000 or something like that, $59,000.
A lot more money.
Yeah, a lot more money potentially, depending on your scenario.
Because it's like a 401k that you set up for your own company.
Yeah.
Again, you put money in, and then your company matches that. It could just be a one-person company, but it allows you to actually have a match on top of that. So there's a whole lot more money you can put in those. Much more flexibility than just a traditional IRA that you have.
Number 5, if it hasn't come through the conversation yet, this is get help if you need it. That's what we're here to do.
But this is not a help like, oh, I'm lost and I'm dying. Like, this is, even some of the most successful people we meet can improve their situation, because this is not a cry for help. This is a, hey, no, I want to do it better. Let's make this. Yeah, let's make this thing sing. Let's make this thing smooth as best as possible.
Yeah, and relying on people that know the landscape, or have the map and know the 10 different ways to get to your destination. It's kind of like that Google Maps scenario. Google might get you there one way, but there could be 20 other ways to get where you want to go. And having somebody that guides you is really what we're talking about. Hey, we're going to take a quick break at Money on Tap. We'll be right back. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. Also appreciate all of the likes and downloads and subscriptions out there from our podcasters. If you're not a podcaster and you're checking it out, lots of venues, Apple, iTunes, Stitcher, just a couple of them. And you can go back and listen to this show again or some of the other shows that we have out there. Appreciate you listening to Money on Tap. We'll be right back with more of Two Certainties in Life, Death and Taxes. Hi, my name is Seth Crustman, partner with Brayshaw Financial Group and one of the co-hosts of Money on Tap. One of the biggest concerns and largest expenses people face today is taxes. Without thoughtful planning, taxes can destroy future retirement dollars, eliminating the possibility of a timely retirement or dreams of what you want retirement to look like. If you're like most people, you're getting closer and closer to retirement, and you may be wondering if you're taking the right steps. Will my income be enough? Will rising taxes force me to give up my dreams? How does inflation factor into all of this? These are real concerns, and you're not alone. Putting a plan around your financial future is what we do. If you have questions when it comes to your financial security, and if you're looking for a personalized solution, contact us at Brayshaw Financial Group, 855-226-8551. It's time for you to start getting answers to your questions. Headquartered in Bedford, New Hampshire, Brayshaw Financial has offices across the country. We'd love the opportunity to show you how we can help. There's absolutely no cost or obligation to meet with us. Call us at 855-226-8551. 855-226-8551.
More Money on Tap in just a moment. On this edition of our Money on Tap Cliff Notes, John Ryder shares one of the more unusual questions posed to him by a client about an insurance policy.
The most bizarre question that I have ever gotten was from an assigned client, and this guy had a life insurance policy through the company in which I work. This was not a policy, again, that I had sold him, but he said he wanted to know what the suicide clause was on the policy. I didn't know the client, but it was kind of unsettling. I was kind of like, that's kind of weird. He didn't really want to chit-chat at all. He didn't want to really talk much, but he just asked me politely what it was. Now, if people don't know this, there's typically a 2-year clause in the policy, which basically means if you attempt to take your life in the first 2 years of the policy doesn't even pay out, but it will only pay the premium back that was paid in the policy. So I don't remember what my exact conversation with him was, but in looking up his policy, he'd had it for a number of years and it would have paid out. So I think I said something to him about it, but there may be other solutions for him to consider is kind of what I was saying. To my knowledge, there's never a death claim on the policy, but it was really a pretty unusual question.
Thanks for joining us for this Cliff Notes edition of Money on Tap, with great tips from the pros in three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. And now here's more Money on Tap with Ben, John, Seth, and Eric.
Welcome back. You're listening to Money on Tap, your personal finance headquarters. Money on Tap's where we bring out the professionals' experience and some fun in what we call three-dimensional investing. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. You can also find us at Facebook at 3D Investing. We are talking about two certainties in life, death and taxes. Both are very exciting for us to jump into
Yes.
and conclude here and wrap up.
Hey, Seth, one of the most interesting, I should say, maybe most often asked questions that we get when it comes to taxes, when people are chatting with us about them, or they might say this. So, what's the difference between a tax deduction and a tax credit? And there are some major differences out there when it comes to the two. Ben, what would your answer be when it comes to the difference between a tax deduction and a tax credit?
Well, a deduction is something that you get to, write off. Now, one of the things that has changed, and I was mentioning this earlier in the show, and people have lots of write-offs and deductions, whether they're medical or they're self-employed, and they've got, a Schedule C is what we use, and and so forth when you're self-employed, and you're deducting those items against your income.
Which we all like those tax deductions whenever we can get them, for sure.
Now, a tax credit, though, is a dollar-for-dollar reduction in your actual tax bill.
I like that better.
Yeah, that's much better. So, like, for instance, right, if you make $100,000 and you donated $30,000 to charity, your deduction would be taking $30,000 off your income.
You have
But-
something to do about that, right? Like that's something that's an action that you can take to have an effect or an influence over your taxes, right?
That's correct. Good job.
All right.
But a credit is literally against what you owe the IRS.
Okay, so if you owe $1,000 at the end of the year and you get a tax credit for $500, then
You're going to
$500. Yeah, nice.
You're going to owe
Okay.
$500.
Yeah.
And so that's really the simple way of defining that. And a lot of people, like when you say, "Oh, you're going to get a tax credit," you got to be careful because I hear a lot of financial professionals. I mean, and they mean well, and they use credit and reduction, deduction almost
Interchangeably, right? Yeah.
and they're totally not. And
Yeah.
that's something you really need to be careful about and how that's handled, because you need to listen carefully when you're talking to somebody, because I had to talk to somebody one time about the difference between a deduction and a credit, and they were
Yeah.
like, and they knew what the difference was, and I was like, they're like, "Oh, credit? This is a yes, it's a credit." Oh, okay. So those are the types of things that you want to be careful of.
Yeah. Okay. So there's a lot of different tax credits and tax deductions out there. We've been talking about being self-employed. Let's talk a little bit about some of those tax deductions that you could get. If you're self-employed, and let's say that you have an office out of your home where you have a dedicated room to that, well, for some people, they can go ahead and get a tax deduction for having that office space. They deduct a certain amount of square feet of their home for that. However, one thing to remember, whenever you're getting deductions, you just want to make sure you can verify what those deductions are, because you could have an audit come back and the IRS could say, well, we want to see that office in your house, or we want to see exactly how much you use that office. And so there could be a lot of gray area there. You just want to be careful that you're not taking more deductions than you can actually take, because typically if you're taking a ton of tax deductions out there, that could certainly be an audit trigger, where if they see a lot of different things happening that are unusual, they might want to double check and say, hey, is this actually being done legitimately?
Yeah, that is something that you want to be careful of. And it's funny. There's a fine line between, like you can deduct a whole heck of a lot. I mean, there's a lot of stuff out there to deduct.
Sure, from mileage to cars to leases, whatever it may be.
Yeah, there's a lot of different ways to handle it.
Guys, you can even deduct a gambling loss. I'm looking here, and this is the first time I've ever seen that. I don't know what that amount would be, but
in my case, it would be zero, Eric. It would be zero.
Is that something that applies for you, Eric? Are you looking at it?
No. Oh, definitely not.
For other people,
but
Eric.
Just yeah. For other people that I know.
Oh yeah. I've got a friend.
A good friend.
And his name is Eric. My friend Eric.
But it's odd. Yeah, it's Eric with a C. But one of the questions I had was, have any of you actually gone through an audit, a tax audit in your lifetime?
I have. I went through it for 2 years. I had the IRS. I had 2 years worth of tax returns opened. They opened up 2 years. It took me 2 years.
Okay, so that doesn't mean that they came to your office and just were there every day for 2 years?
No, I actually had my
Okay,
CPA.
that's good.
We spent 2 years, fighting it, because it was like, hey,
Just
here's all
sipping
your
coffee.
Yeah.
in the back.
And the
It's
biggest
funny.
thing that Ben learned was that he was not going to claim a 10,000 square foot home office deduction. And that's pretty much
10,000
how
square
it
feet. I know. I was like, you can't use that much at home.
Come on, guys. It's a pole barn
What are you talking about?
/ office.
But it's just interesting. That whole process was a major learning experience, and it was good. I mean, at the end of the day, it was just a year with a lot of deductions, honestly. And so but I learned a lot about how the IRS looks at things, like charitable donations. Like, they wanted to see that I had given as much as I said I had given. I mean, they wanted.
So they want to see check stubs. They want to see.
They wanted to see all that stuff. I mean, we went through a line of. I mean, I think one of my assistants works with us. She spent months. We had to photocopy receipts and everything, and it was a whole screw up mess, because they had basically a private auditor auditing me when it should have been a business, and so forth. And that's why it took so long. But at the end of the day, it was all resolved. No big deal. And. But I spent a lot of money defending myself. That was the real cost. I mean, I spent a lot of money, like with my CPA and the time and the effort and staff, just to.
And you're trying to run a business at the same time.
I'm trying to run a business, and I was like, and they said, if you prove yourself, you're less likely to get audited again for a very long time. If you just settle with them, then you're bound to get another audit pretty reasonably fast. Now, they say that doesn't really exist and so forth, but I talked to 2 CPAs, and they said, listen, if you settle, you're almost guaranteed another audit within 5 years.
Interesting. Yeah. They want to see if there's something else out there that they can try to...
Right.
So really, guys, there's a lot of different deductions. If we're just going to go through a few of those right now.
Can I just add one thing?
You may.
That? So, what I would encourage people is that even though you can deduct a whole heck of a lot, sometimes it's not worth pushing the envelope.
And there are some very black and white deductions that you can make. So let's just go through some of those. So, for instance, an IRA deduction, a contributions deduction, totally makes sense. Okay, let's just give a quick example of how this works. If you have $100,000 of income that you made over the course of the year, and you decide that you want to contribute $5,000 into your IRA, well, right away, the government's going to look at it as if you made $95,000 for the year. It's going to be a very easy, black and white, easy type of deduction, and no one questions that on those kind of things, and of course they shouldn't. It might be the same thing for a 401k contribution that you make. So if you're having taxes, let's say that you're not self-employed and you have your 401k deductions taken out, you're going to be able to save taxes on that right away. There's also different things such as health savings account contributions. Again, black and white, not gray area. Self-employment expenses.
One of the things on that 401k piece that it automatically shows up as a reduction of your income on your W-2. So it's not like you have the income that you bring in your W-2 and then you go ahead and take that 401k contribution on top of that. That would be fantastic, folks. If we could figure that one out today, we'd be letting you know right away too.
If you're in a position where you have your income is at the level where you can get the earned income tax credit, totally take that. I think you just have to be aware of these. And Ben, as you were mentioning earlier, taking charitable donations deduction. Medical expenses sometimes are able to be deducted as well.
We do a number of charitable lead trusts donations where people actually get large income tax deductions, large deductions off their income due to doing those types of programs, and those are they can be pretty advantageous to the investor who needs a large deduction and so forth. So there's a lot of things in the charitable world that you can do that can benefit both sides, and that's what they're designed to do.
Yeah, if you're listening to this show and you're thinking, "Wow, I made a lot of money this past year," and you really have not come up with some very legitimate deductions to make, well, you should talk to someone that can help you with that. And as investors and as financial advisors, we're able to give you some advice that will really be able to help you save in the future when it comes to your taxes, because there's nothing like making a lot of money in 1 year and all of a sudden realizing because of taxes that you really didn't make a whole lot of money when it all comes down to it because your tax bracket is so high.
Right. I think the one thing that people are going to really lean on right now, that's going to be where your retirement accounts potentially are for you, especially the self-employed person. They're trying to figure that out, and you can basically contribute to most of your retirement plans right up until the day you file, and that's something to be aware of. I think that's probably the biggest item. I would say, guys, would you say that we get phone calls on is, hey, listen, my CPA says if I can put another $5,000 or $10,000 away, I'm going to save XYZ.
The phones are ringing, obviously, from April 1st on a lot more because people are thinking, oh, can I put some money into this? Can I put some money into that? And actually, the answer is for most folks, yes, you can. But you don't want to hold it up right to the deadline either, because many times to get these contributions in, that you need to have it well ahead of that actual April 15th. Just depends upon which investment company. So really a very timely thing to consider when it comes to paying your taxes and getting the best deductions you can.
We get it. When it comes to tax time, it may not be the funnest time of the year, but we hope that some of the things that we've talked about today will help you get a little bit better handle on how things work when it comes to your taxes. But better yet, we also hope that what we discussed today will have a real impact on you when it comes to getting your taxes done. As we mentioned at the beginning of the show, we're not tax advisors and we're not licensed to give you tax advice. That being said, there are steps you can take to help keep the money you earn in your pocket. Let us know how we can help you here at Brayshaw Financial Group and Money on Tap. You can reach us at 855-226-8551 or email us at info@yourmoneyontap.com. Thanks for joining us today at Money on Tap. We look forward to seeing you next time.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.